taking a live look at the New York Stock Exchange on the start of this trading day on Friday. We're seeing the Dow begin the day with modest losses. If you're wondering who that is ringing the opening bell, come on, it's kind of obvious. MTV, they're ringing it in because of the MTV Video Music Awards coming up. It's upcoming on Radio City Music Hall in New York City here. And honoring the occasion is the Executive Vice President of Talent and Music ringing that opening bell. As far as today goes, direction-wise, I think you're going to see how investors decide to come off that massive rally from the prior session. Let's head over to the CME Group in Chicago for the latest market action. We've got Bob Iaccino. He's with us, and he's the founder and chief strategist at Path Trading Partners. So good to have you on today.
Good morning, Alison.
Good morning. So we saw news about China coming back to the negotiating table with the U.S. That drove the trading yesterday. But here's the thing. What if those negotiations, with which what I'm hearing only include middle to low level negotiators, what happens if nothing comes out of those meetings? Could we see a massive sell-off?
Well, I don't know about a massive sell-off, Alison. I think you're right to characterize this as very little to no news. But if you've watched the markets, essentially we're about to close another virtually unchanged week in the S&P 500. There was a lot made about reaching up toward the highs. We're still about 1.5% away from those S&P highs, a little bit closer on the NASDAQ, a little bit further away on the Dow. We've essentially had 2 weeks of unchanged action. What ends up happening is that if we get a negative trade headline or a negative headline on Turkey, something that exacerbates the situation that was really driven and exacerbated by the doubling of the tariffs. The lira was already dropping, as a lot of emerging markets were against the dollar. President Trump exacerbated that by doubling the tariffs. Having said that, when we see no headlines or we see a slight positive, you get the kind of action we saw yesterday. When we see a negative headline, you get kind of a waning of that, but you still don't get these massive sell-offs because at the end of the day, we have another 23, 24% blended earnings growth rate in the quarter here in the U.S. It's really a really nice house on a fairly average block in terms of the stock markets globally.
Yeah, but you see, there's always a reason to sell, but sort of the net is that the market continues to move higher, whether there's negative news or not. It's almost like the market's Teflon.
Well, people don't realize this, but the S&P 500 is in a drawdown about 70% of the time that there's trading. So we can't continually make new highs. And you're right, there is always a reason to sell. You take that lack of reason to sell away, and you really see that underlying momentum, which is bullish. I mean, the markets are bullish. I'm actually taking my target for 2018 on the S&P down a little bit, simply because we did not beat last quarter's earnings. Now, there was a lot of talk about peak earnings, and people tended to think that last quarter's 24, 25% blended earnings growth rate had to drop down to single digits for that to be peak earning. It doesn't. This quarter, while good, is less than last quarter. And we're not really seeing full effects of tariffs because all the tariffs haven't been implemented yet. So I think if they continue to be implemented, and I think this is going to be a little bit longer drawn out trade war than a lot of people are saying, I think earnings continue to drop. But I still think we end up with a positive S&P somewhere in the range of 9 to 10% at the end of the year.
Okay, very quickly, I just want to go to this tweet from Donald Trump just about a short time ago. You know, said he talked to some of the world's business leaders, and that there should be a stop in quarterly reporting and go to a 6-month system. It would allow for greater flexibility and save money. He's asked the SEC to study. What are your thoughts?
Well, I hope nobody gets mad at me, but I liked my first Donald Trump tweet ever. I really like this idea. I like taking that out even further. Warren Buffett gives annual guidance, and that's it. And nobody questions it. I think there'd be increased advantage, unfortunately, for institutional investors who can actually talk to CEOs. But I think that would be in the short term. That would be the problem they have to fix, to not put the individual investor at more of a disadvantage than he or she already is. So that's the only negative I see. But getting CEOs to focus more on their business and less on their quarterly reports, I think, is a good thing.
But the lack of transparency, that doesn't bother you?
Well, it does in the sense that the institutional investors will have an advantage, and I think that has to be somehow taken away and evened out. And I don't know what that answer is. That's a question for the SEC. But I think anything that gets them to focus more on their business and less on their quarterly reports. Right now, CEOs make a lot of short-term decisions that aren't necessarily good for the long term. Anything that makes an investor more long-term is a better thing.
All right, Bob Iaccino, thanks so much. It's been great talking with you.
Thank you.